Hey, what's going on, everybody? Hope everybody's doing good today. I'm going to be showing you some freaking sauce today. I'm going to tell you right now because this strategy is amazing, about around 85 to 87% win rate, guys. This is called the REM strategy. Basically, it stands for reciprocal expansion model. Some people call it realistic expansion model or reciprocal expansion model. It just depends. With that being said, this strategy, guys, oh my gosh, is so good. I'm going to give you guys some sauce today. So if you guys like this, hit the like, hit that subscribe. So with that being said, let's go ahead and jump in here. But before we do, also, guys, I want to invite you guys to my Discord server and be a part of it. So it's in the link down below in the description. So go ahead and check that out. But with that being said, let's go ahead and show you the strategy here. All right, so we're going to start on the 1 hour time frame for the strategy, for the REM strategy, for the realistic expansion model or reciprocal expansion model. All we're going to do is, first step, identify liquidity. What is liquidity? Simply highs and lows in the markets. Currently, look, as you can see, this is the 6 a.m. candle here. All we're going to identify is highs and lows in the markets. I'm going to start by this high. This high. We have these lows here. I'm going to mark out this low, this low, this low. This low is really far down here. I want to see price reaching this low today. Tomorrow it could, or Monday it could, but just depends. Alrighty, so all we're going to wait for is a sweep of that liquidity. Okay, it could be this low first, it could be this high first, it could be this high, it could be this low. We're just going to simply wait for a sweep. All we're going to do is go ahead and go on the 1 minute time frame. And then we're just going to wait for market to hit either the high or the low of those hourly liquidity. So on the 1 minute time frame here, guys, looks like we're pretty close to this low. We actually did hit this low. So hourly low is swept. Okay, awesome. So price actually came down here past these lows. So now what we're going to look for is an IFVG. Price comes up. What do we have here? From this low here, we're going to go ahead and go back. We actually have this bearish and fair value gap here. If we expand this out, as you can see, this is an inversion fair value gap because price came up, closed above this here, which counts as an inversion fair value gap. Simply you could go ahead and go long at the retest or right at the break, stops below the inversion, or to be safe at this low. All we're going to target is opposing liquidity or imbalances. So we have this bearish value gap up here, price could run up to. And then we also have this high. So for a good risk to reward, I'm going to go ahead and target a 101, just slightly above this high. So we'll just go ahead and see how this trade plays out. We'll just say we buy here. All right, as you can see, it would have hit that high, took partial there, or took profit. Pretty simple. Boom. That is your trade. Pretty simple. It works really great because it's going to show you that we have order flow in the markets. When you go off an inversion like this, it's going to show you that we have order flow here. So price went above the inversion. We have order flow. Retest this fair value gap, continues, rallies higher to this high. So basically, guys, if you guys did get into this trade, you could also take a partial at this high and then have your targets at another imbalance. So for example, at this bearish fair value gap here, one here, one, this big one here, and then you could also target these highs as well. So this is our strategy here. So what it implies for targets, so just targeting opposing liquidity or our imbalances. So for example, our fair value gaps. Or we have this higher time frame order block here. Price could likely to go into. I'm going to mark this out as well. Let's just go ahead and see how price reacts here, and we'll just see where we could take partials. So let's go back here. We'll just say if we entered this. All right. Price comes up at that high. we're going to go ahead and take off one contract. So we're going to go ahead and take off one contract there. We're going to see what price does now. Price comes down, goes back up, kind of creating more. We just create another inversion right there. So it looks like we are consolidating a lot in this zone here. We are consolidating a lot. We're just going to see how price reacts here. So now we got a nice little breakout of these highs here. Pretty nice. And then we're also inside of this little imbalance here. So if we close, retest this, we could go ahead and hit this order block. Or we could go ahead and retest this, go past this order block, hit these highs. Or fail to hit this order block, come back down this low. It would be actually pretty ideal to just go ahead and break it even. Just so you have a risk-free trade. So we'll see what price does. Looks like it's testing a little bit. It goes up right to the order block. As you can see, respects the order block. That right there could be another partial for you. And then price comes back down, and eventually it looks like it does, I think, almost hit this high, which is our take profit, or full take profit would be that high right there. So that would be a really long trade, too long of a trade in my opinion, but however, that is like a 2-hour trade there. The more ideal setup for this is to take a partial right at the order block, exit out fully there. Alright, you guys, so here's another example. So the first step what we're going to do, we're going to go ahead and identify liquidity. Where is our liquidity? Well, we got this high. This is our liquidity. And as well, you can't really identify a low, but we are in this 1 hour for value gap here. So this will act as support. However, we're trying to identify liquidity for the strategy only. So I'm going to go down one more time frame. As you can see, we actually do have this low. Price actually did sweep out here right at 630. All right, so we're at 639. It looks like it did sweep it out here. What we're going to look for, remember our rules here. So after the liquidity, what we're looking for, we had that sweep of liquidity here. But for a bonus to make this a nice A+ setup, what I like to do is actually wait for price to make that low here, which it did make that low. But I'm also looking for price to go ahead and come back up and retrace down to here, which actually takes out lower time from liquidity before rising back up to an inefficiency here, or a just liquidity point here, this high to this high. For a A+ setup, we want to wait for a sweep of this low here. Let's see if we get it. So price looked like it barely, I wouldn't really consider that close above. It looks barely, but I wouldn't consider it. I want to see a little bit more than that. We actually did reject off hitting this low, which actually counts as that bonus. We have that lower time frame liquidity swept, as well as our higher time frame liquidity. So now we know, cool, both liquidities are swept. Buyers are getting trapped. Now it's time for us to make a profit off those buyers. So what we're going to do is we need to wait for an inversion for value gap. Price, we did have this one from earlier. We didn't make a new one from this low. However, it's okay to use one back in the past as long as it hasn't closed above it. But this, I wouldn't really count that as it closes because it's right on edge with it. Price closes up here. This would be your entry on this retest of this inversion for value gap. And then all we're going to do is our stops at this low to be safe, targeting our liquidity or imbalances. Alright, so just say we buy 2 contracts here. What I'm going to have, my first take partial would be at this low of this fair value gap. Why? Because remember, we're going off of opposing liquidity or imbalances as a target. This is an imbalance. Price will probably try to fill that in. Price comes up, boom, right there. This would have been a partial up there, then stops. So we'll just move the break even. For example, it would have broke us even there before. Looks like continuing higher, as you can see. So you could put partials there, or you could take full profit. What I like about this is that you can always take profit. You could wait for price to get more into this fair value gap here to take more profit. You could wait for it to get inside this one, or even taking out these highs, because we did sweep out this liquidity as well as lower time for liquidity here. Boom, with that inversion for value gap, close above, nice retest here in the next candle, targeting this here. Pretty simple trade. So with that being said, I hope you guys do like this strategy. It's pretty awesome strategy here. I just use this strategy all week so far, like an 85% win rate. Pretty awesome, to be honest with you. And yeah, so with that being said, again, hit that like button, hit that subscribe button, guys. I'm here with you all the way. Don't forget to as well to join the Discord community. I'm going to show all my strategies as well, and it's going to have all my stuff on there for free. And with that being said, guys, hope you guys have a great rest of your day. Take care. Trade on. Peace out.